I think the way that many investors, and I think for all the wrong reason in my view, are trying to basically have decided that after the debate, after Trump survived 4 indictments, that, an assassination, that Trump is the guy. And I think to the extent that this year so far, it's been a challenging year for a lot of macro investors. People are now ready to jump on the Trump bandwagon, the so-called Trump trades. But I think, in my view, they're jumping the gun. I think the election process is just barely getting started.
David Woo, CEO of David Woo Unbound, a global forum devoted to the promotion of fact-based debates about markets, politics, and economics. Also, the former head of global interest rates, foreign exchange, emerging markets, fixed income strategy, and economics research at Bank of America, and an analyst who is known for his prescient calls, including nailing the 2016 and 2020 election outcomes, and the most popular guest on this program to date. It is such an honor to welcome you back on the show, David. I am so excited to talk to you. It's such an important and critical time. Thank you for being here today.
You're welcome. It's a pleasure to be on your show.
Well, I know our viewers loved having you on. I think we had you on back in February. You said at the time, just looking at the macro, the political sphere as well, the polarization, that July would feel, as you put it, it would feel like shit as we got closer to the election. I would love to start with the big picture, the macro view. Where are we today, David? And take all the time you need to set the table, if you will.
Yeah, I think the macro view, if you're talking about the macroeconomic view, I would say that there's a lot of uncertainty right now. I think everybody's sort of in a wait and see mode, including the Fed, by the way. You might have said a week ago that Fed is going to cut rates already in July, but I think, the fact that we are stronger than expected retail sales numbers for June that came out this week, I think also makes the case that they should probably wait until September. So I think on the economic side, I think there's a lot of uncertainty. I think on the geopolitical side, I think it's interesting because all this uncertainty, especially with respect to the U.S. election outcome, is actually sort of like slowing things down. Think about this. If you are Vladimir Putin and you're thinking that Trump might be actually returning as commander-in-chief in January, you kind of want to slow walk the war in Ukraine. You certainly don't want to do anything that will make the war irreversible in any ways. So I would argue on the geopolitical side, things are slowing down. And as you know, I live in Israel. I just put out a report yesterday making the case that Hamas is on its last leg. So from that point of view, I think, Israel is increasingly confident that it eliminated earlier this week Mohammed Deif, who is the mastermind of the October 7th attack. And I think from that point of view, if indeed that is confirmed eventually, I think that would suggest that Hamas is in a bad shape. And this is the reason why they're so eager to basically get a deal now. Actually, I suspect that over the next 10 days before Bibi Netanyahu heads to Washington to address Congress, I think, you're probably going to get a ceasefire deal. So what I'm saying is this. Economics-wise, I think the U.S. economy is slowing. The global economy is slowing. But I think, we're not slowing that fast right now. In the sense that we're still in a wait and watch mode. I think geopolitically, things are definitely getting a bit better. I think there's no doubt, right now, all eyes are on the U.S. election. And I think from that point of view, I think, clearly this past week, Wall Street is trying to get basically like a head start, right? It was shocking to me that, that 2 days after Trump got assassinated, the stock market just took off. Clearly, I think the way that many investors, and I think for all the wrong reason in my view, are trying to basically have decided that after the debate, after Trump survived 4 indictments, that, an assassination, that Trump is the guy. And I think to the extent that this year so far, it's been a challenging year for a lot of macro investors. People are now ready to jump on the Trump bandwagon, the so-called Trump trades, to turn around what has been so far unspectacular year on Wall Street. But I think, in my view, they're jumping the gun. I think the election process is just barely getting started.
Explain that. Like, you think they're jumping the gun. I am curious because I would love to go into that thought process as well.
I think there's sort of several moving parts here, right? I mean, so the market right now is thinking, okay, fine. So Trump is going to win. The Republicans are going to capture both House and the Senate. So as a result, you're going to get a Republican clean sweep like we saw in 2016. And the market believes that that will basically lead to tax cuts, okay, which will lead to faster growth, higher inflation, higher budget deficit. And this is the reason why people are jumping into stocks, okay, in a very big way, especially small cap stocks. And at the same time, people putting on curve steepeners, right? Betting that long-term interest rates are going to, basically go up relative to short-term interest rates on the view that the budget deficit will be basically a struggle to finance under Trump. So that's the mindset right now in the market. And then obviously, I don't tell you the big story a lot of you guys care about is that Bitcoin just basically like soared after Trump survived the assassination because people believe that Trump is a friend of Bitcoin, that the fact that he allows Bitcoin to be people to donate to his campaign using Bitcoin. So what I'm telling you right now, the market script at the moment is that we're just going to see much of the same like in 2016. Okay. And that is, you're going to see Trump winning, clean sweep, lower taxes, higher growth, therefore higher rates, higher dollar. And to the extent that the second half of, the last 3 months of 2016 made a lot of people a lot of money by piling into Trump trades, okay, people are thinking that, well, maybe the same is going to present itself in 2024. And that's what people are going for. So let me tell you why I think, the market is jumping the gun. I think, first of all, I think the election is not over yet. I mean, listen, as much as you know, I'm a big supporter of Trump policies. I mean, so from that point of view, there's nothing I want to see more than for Trump to get back in the White House. Okay. However, I think, even I am not at this point willing to say that at this point is a slam dunk that Trump is a shoo-in. I think there are many moving parts here. So let me just basically take one at a time.
Yeah, take your time.
I am not a conspiracy theorist, and I'm not in the business of conspiracy. I mean, today I count among my clients some of the biggest investors in the world. And at the end of the day, they're only interested in my predictions being right. I mean, I could sound very provocative and entertaining. That doesn't actually help enhance my credibility. No, as you know, like in fact, on your show in February, I said that I think there was a decent chance that Trump might get assassinated, before the election. Now, the question, obviously I got a lot of congratulatory emails, over the weekend saying, David, you nailed it again and this and that. You said this was going to happen. It happened. And the question I've been asking myself ever since is, okay, so the fact that there was a failed assassination attempt on Trump, does that mean that there won't be another one before the election? Okay. I mean, let's just think about this without any politics involved. Let's just look at the facts on the table. Again, this is about making money. I love basically thinking about this through the lenses on Wall Street because it sort of forces you to think very objectively rather than thinking with your hearts or with your political bias, right? I mean, you think about this, right? Basically, we all know Trump was shot in the ear, which means whoever was shooting at him was aiming for his head. So that was no doubt was a shoot to kill. Okay. And from 150 yards away, I would argue whoever tried to shoot him was a pretty good shot. And what was interesting, of course, is that the kid, the 20-year-old kid, has nothing to do with the military. He didn't even own his own gun, that he stole his father's gun. So how did he manage to become such a good shoot? And on top of that, it's not like there were lots of places for him to hide. There was just one building. Okay, that was high enough to give you the advantage point of what Trump was going to be speaking at. The fact that this kid, 20-year-old kid with no military training, climbed onto this, planned this whole entire thing, and was able to, basically get around this police and the Secret Service. Listen, this kid seems to me like a professional. I mean, we joke about this here in Israel. Well, this guy, he could be basically working for the Mossad, that kind of thing. So obviously it's not quite compatible with, the sort of the little we know about him that has been released so far. Of course, very conveniently, he was a registered Republican. Can you imagine if he had been a registered Democrat, what noise that would have basically made? Can you imagine Can you imagine if the assassination attempt in general happened on a Friday or a Thursday or a Wednesday instead of a Saturday, because the stock market would have dropped 10%. Mm-hmm. Okay. What I'm trying to basically say is that, it seems to me, again, we don't have, I make basically predictions based on, evidence. I don't think the evidence is clear cut either way, whether he's a crazed lone wolf or that there is more to it than meets the eye. Now, therefore, I have to ask myself, so let's just say when I don't know, I say, well, it's 50-50. So let's just say there's a 50% chance he was a crazy lone wolf, and there's a 50% chance he's not. If he's not, the question then is if he's, if there's an attempt trying to kill Trump involving other people, will they try again? Okay. Now, I think that has to be viewed as a legitimate hypothesis, especially given I feel like I've earned the right to actually at least entertain the hypothesis simply because I call the assassination. So I think from that point of view, this is the reason I actually suspect that Trump thought that too, by the way. I think actually the reason why Trump went with J.D. Vance probably has something to do with the fact that he does not believe that this was the work of a crazed lone wolf. Just think about this. Because J.D. Vance is a mini Trump. J.D. Vance is to the right of Trump. J.D. Vance is from a state where Trump is going to win anyway. J.D. Vance is not going to help bring on independents, women, Hispanics, blacks, and so on and so forth. J.D. Vance, from that point of view, electorally, I would say he's one big fat zero. I mean, to the extent he does not add to what Trump already basically offers to his base. The only way I think Trump decided to go with J.D. Vance is for Trump to send a message to whoever might be trying to kill him that guess what? If you take me out, you're going to get someone exactly like me and maybe a little bit worse. So my view is that even the choice of J.D. Vance and the fact that even Trump on stage kept talking about he was supposed to be not here, he was trying to tell you how close it was, that if he hadn't looked up in the teleprompter, he would have been a dead man. That's what it is. Can you imagine if Trump had been shot dead, what the stock market would have done? Instead, the stock market took off on Monday. Mm-hmm. I mean, it is crazy beyond belief. But what I'm telling you is this. Again, I don't think this thing is over. I think it's not over to the extent that I could. And by the way, I'm not even telling you it's going to be like, I'm not saying that, Trump, that this is about like a bunch of crazy progressives that are going to try to take Trump out. Remember, this is the most important thing. Who has the most incentive to stop Trump from becoming president? Let's just think about that for a moment. Okay. Let's remember, the U.S. is now spending $1 trillion on defense every year. Let's remember, that there are many people in the defense establishment think that it's absolutely imperative for Ukraine to win the war against Russia. Well, otherwise, America would have lost its prestige and hegemony. There are many defense hawks in America who believe that Trump is too weak on China, that he's too weak on Russia. Remember, in September 2020, again, everybody who's following this, you can Google this yourself. September 2020, Trump came out attacking his generals, publicly attacked them. And what did he say? He accused them of trying to prolong the foreign conflicts the U.S. was involved in so that their buddies at defense contractors can sell more tanks, more planes, and get more people killed. That was a huge, basically, outcry from the military establishment. You think the military establishment really wants to see Trump return as commander-in-chief? Probably not. But the bottom line here is this. I think, again, we can, when you play detective, you're always trying to find motive. I'm just telling you right now, I don't know. But what I do know is this. I think the risk that there could be another attempt on Trump is non-trivial. So that's one part of the story. Now, there's more uncertainty, right? I put out a video 2 weeks ago saying that there's an 80% chance that Biden is going to drop out of the race. I still think that. Mm-hmm. Okay. Now, I think, it's simply because it is very clear that Biden cannot win against Trump. So from that point of view, I don't even think Biden wants to basically run against Trump and lose. So if Biden himself becomes convinced that he's going to lose to Trump, then he probably will be more than happy to make way to somebody else. And right now, his numbers not adding up, right? Right now, the polls after polls showed, in fact, something like 55% of Democrats, we're not talking about the country, 50% of Democrats think that Biden needs to basically quit the race. Now, there are a lot of people talking about Kamala Harris and so on and so forth. Who knows? Okay. But my feeling is that the Democratic Party will struggle to impose a candidate on the 4,000 delegates who will be, essentially descending on the Democratic Party convention next month. Okay. So I think that in the end, there will be a little primary, okay, to find a replacement. Now, it's possible nobody else wants to run except for basically Kamala Harris. That's a different story. I don't exclude that possibility. But right now, I'm assuming that some people, perhaps quite a few people, will be throwing up their hands to save the party, to save the country from Trump. And I actually think that the only person, in my humble opinion, who could potentially give Trump a run for his money is Gretchen Whitmer. Okay. Now, Gretchen Whitmer has quite a few things going for her. Now, again, I'm no fan of Gretchen Whitmer. She's progressive, but that's a different story. I'm just looking at her candidacy and say, well, how does she stack up against Trump? I actually think that she will make the race a very competitive one. Okay. First of all, she's from, Michigan. I don't tell you, right? For Trump to win this election, he will have to win either Michigan, Pennsylvania, or Wisconsin, right? Mm-hmm. And guess what? Even though Michigan, is a Republican state, well, at least, if you look at actually what happened in 2022 midterm elections, she won her re-election by 10 percentage points. So for a Democrat, she's actually quite popular in her own state. Now, she has the credential of being a progressive. The whole, basically the abortion thing that she did there was very popular among basically progressives. But this woman also has a track record of being more or less business friendly. I mean, she lowered taxes. In fact, her state is doing very well economically speaking, so well that S&P actually reaffirmed basically as credit rating recently on the strength of the budget discipline and basically the healthy economic growth. So I would argue that Gretchen Whitmer actually seems to me have a much better chance against Trump than, let's say, Kamala Harris. Okay. And if she could team up with someone like Josh Shapiro, for example, from Pennsylvania, I mean, that, then you're talking about Pennsylvania and Michigan and so on and so forth. But be that as it may, so what I'm saying to you is, even just to get to, November 5th, to know who's going to win, to me, this is not a slam dunk yet. To me, the most shocking thing about the last 2 weeks is that after Biden's poor debate performance, after Trump's basically assassination attempt, the polls have moved in favor of Trump, but not by as much as you might have thought otherwise. Okay. This race is still pretty close. What it tells me is that, this is a partisan election. Democrats are going to vote Democrat, Republicans are going to vote Republicans. And then so from that point of view, a lot of people already made up their mind. And of course, that's why what it's going to come down to will be independence. And I actually think that Whitmer stands a much better chance with independence than actually Kamala Harris. So that's just basically getting to the election. And then we can talk about what happens after the election, because I would argue that if Trump gets elected again, like 2025 will have nothing to do with 2017. I think, because one thing I've learned in my 30-year career on Wall Street in the business of making predictions is that the starting point matters. Okay. And 2016 could not be any more different than 2024. But we'll come back to that in a second.
Are you, I would love to actually, unless you're about to make another point, would love to actually go back to that if you're.
Sure. Let's talk about that. Let's think about this for a moment, right? I'll tell you the big difference between 2016 and 2024. Okay. 2016, U.S. budget deficit was 3.2% of GDP. 2024, U.S. budget deficit is going to hit 6.7% of GDP. Okay. Now, why is there such a big difference? 3.2 versus 6.7. That's like a massive difference, right? The difference is that if you recall, okay, the Tea Party, okay, helped Republicans regain their majority in the House of Representatives in 2010. As a result, during Obama's second term, we saw massive fiscal tightening. In other words, the Trump's first term was preceded by massive fiscal tightening under basically Obama's second term. Whereas 2014, the deficit is at 6.7% because we've seen massive fiscal easing under basically Biden. Okay? So Trump's first term was preceded by basically fiscal tightening. If there's going to be a Trump second term, it would have been preceded by massive fiscal easing. What I'm trying to tell you in a simple language is this. Obama gifted Trump with a free lunch. Whereas Biden, if Biden were to lose in November, he would be leaving Trump an empty fridge. Okay? In other words, that Trump will be facing massive fiscal constraint. Now, we said before, like the market is right now jumping for joy, thinking that tax cuts are coming, we're going to see higher growth and all that. The question is that realistic expectation? Now, Trump talks big, as you know. He's talking big about tax cuts on the campaign trail. But if you listen carefully to what he says, and you look at what is stated on his website, all he's offering is making his 2017 tax cuts permanent. Because his 2017 tax cuts are set to expire at the end of 2025. So what he's promising people is that, what he means by tax cuts is that he's going to make people's current very low tax rate permanent. However, the problem with that is, I guarantee you 99% of Americans do not realize that their current low tax rates are temporary. Mm-hmm. So if Trump were to make these temporary tax cuts permanent, it's not going to make any American feel like, oh, well, I'm richer. I should go out and spend more money. You see what I'm saying?
Yes.
So from that point of view, these will be just paper tax cuts that will do very little to spur economic growth. However, even these paper tax cuts will have to be paid for. Now let's think about this. Congressional Budget Office has calculated that making these tax cuts permanent will cost about only $4 trillion over the next 10 years. A lot of money. Now, how is Trump going to find money to pay for this $4 trillion? Now, this part is interesting, and you might have heard about it already. Trump is planning to impose tariffs.
Yes.
Okay, on the entire world. He's planning to impose a 60% tariff on China. Okay, anything coming from China. And he's planning to impose a 10% tariff on imported goods from everywhere else. And Trump, from Trump's perspective, it makes a lot of sense, right? Because he's selling these tariffs as a tax on foreigners, right? So what he was planning on doing is he's going to basically make the low tax rates permanent for Americans, funded by basically a tax on foreigners. Except there are two little problems with this. Number one, okay, China's share of U.S. imports has collapsed. Okay. Today, only 13% of U.S. imports come from China. Okay. As a result, 60% tariff on Chinese goods and 10% tariff on everybody else will raise altogether no more than $2.5 trillion over 10 years. Right? We said before, he needs to find $4 trillion. Mm-hmm. And this will only cover $2.5 trillion. Moreover, the bigger problem is that these tariffs are almost certain to trigger a global trade war. Okay? That is very likely to basically push the entire global economy into a recession. Okay? So that's just a starting point. Okay? On top of that, something that, most Americans are not even aware of is this, right? As you know, the US is part of G20, right? And other members of G20, includes Europe, right? Now, right now, there is this concern in the world right now. And I'm not even talking about from the BRICS country. I'm talking about especially from Europe, right? The Europeans saying like, you know what? Companies like Microsoft, Google, Facebook, these companies are making a lot of money, even in our countries doing business. But because they're headquartered in the US or in Ireland, whatever, they're like paying no taxes. So basically, the Europeans have been itching to get their hands on what they think is their own money. Okay? Now, as a result, currently already, Europe has imposed what they call basically a digital services tax on big tech US companies like Apple, so on and so forth. Except they haven't started collecting these taxes yet. They're just accruing these taxes as a way to force the US to agree to a 15% minimum international corporate tax, which will hit all these US companies. Of course, the US is saying no, no, no. But you know what? At the end of the day, US is one and everybody else. And this is led by Europe, Japan, Canada, the whole entire world, right? Let me tell you this. I think what's going on right now is that Europe is basically cutting Biden a little slack. They've agreed to wait until after the election before they really go for this thing. Okay? Now, what I'm telling you is this. If Trump were to go in and they start basically applying tariffs on everybody, I'm telling you, will give the Europeans, the G20, a perfect excuse to come in and start applying essentially this digital services tax on the big US tech monopolies that are, of course, we all know, the goose that lays the golden eggs for America. This will be very bearish for the stock market, by the way. Be very bearish for the US dollar, because I think the dollar's outlook is, basically it depends very much on the outlook of the Magnificent Seven. So what I'm just telling you is this again. So I could argue you're going to get a trade war. This trade war actually could potentially be very bearish. I mean, forget about inflation. It'll be very bearish for the US tech companies. In other words, very bearish for the US stock market. Right? People say, oh, well, Trump is bullish for Bitcoin, right? Bitcoin has gone up a lot. Bullshit. Because, you know what? Just think about this, right? I can understand. Right now, Trump is trying to appeal to young people, right? I mean, one of the features of this election is to what extent, young people seem to be abandoning, the Democratic Party and basically rallying to Trump's cause, which is a good thing. Okay. So Trump is trying to play cool, he's supporting Bitcoin and all that kind of stuff. You can donate basically on Bitcoin. But do you think Trump is going to remain bullish on Bitcoin if he's elected? Think about this. Trump is going to be facing this massive budget deficit, which he needs to basically find money to finance. Do you think he has any incentive to encourage any alternative to the US dollar, whether it's the RMB or the Bitcoin for that matter? Trump is not that bullish for Bitcoin. In fact, I would argue probably the opposite. Okay, because again, what I'm trying to tell you is this. I mean, this is why, Trump 2.0 is, Trump 1.0, in some sense, it was a layup. It was really a layup, right? Because the US had gone through 5 years of fiscal tightening. The US economy, as a result, was going through this jobless recovery, this very anemic recovery because it was going through fiscal tightening. And Trump came in, cut taxes, deregulated, the economy took off. Now you get a situation whereby, the debt to GDP ratio right now, federal debt held by the public is over 100%. Interest payment on US debt is $1 trillion. There is no low-lying fruit, fiscally speaking. There is no room for more stimulus. Okay. And anything Trump is going to try in terms of tariff and all that kind of stuff could backfire very easily. So I think all in all, what we need to understand, this is why the market thinks, oh, well, Trump trades 2016 made a lot of people money. I got to go for it again. People have a very simple way of thinking about history. But let me tell you this, history never really quite repeat itself, especially when the starting point is so different.
Yeah, that's such an interesting point. And this is why I love having you on the show, because you're helping folks think about things that they might not. As you point out, most folks are misinterpreting or getting this Trump trade wrong. I have a question for you. So on the economy, you mentioned this like metaphor of like Trump got a free lunch, and then he this time let's say it's Trump 2.0, he's going to get an empty fridge. Is it possible that he could like inherit a recession? Might not be his fault. I don't know if that's a good question, but just curious about like what the kind of circumstances you inherit when you take office.
Yeah. Julia, you have, like the stuff that's going that Biden is going to leave him with a huge mess. Okay. And let me explain to you in one thing. I'm going to give you a mini example, but let me just give you one. I'm going to give you two. Okay. But here are one first. Okay. As you know, U.S. is currently running a budget deficit of $2 trillion. In other words, the U.S. government is basically spending $2 trillion more than it's, basically bringing in terms of tax revenues. For those of you guys who are not economists at home, that's what it means. The U.S. is currently running a budget deficit of $2 trillion, which means that U.S. government, U.S. Treasury, has to issue $2 trillion to basically finance the government, to keep the government running. Okay. Now, over the last 12 months, of these $2 trillion of Treasury securities that U.S. government has issued, incredibly, only $500 billion of them were bonds and notes. Bonds and notes are basically like bonds that have a maturity of more than 1 year or longer, right? Which means, the rest, which is $1.5 trillion of Treasury securities that U.S. government sold, were actually Treasury bills. In other words, with a maturity less than 1 year. Okay. In other words, 75% of what the U.S. government issued to finance its budget deficit in the last 12 months were Treasury bills. Let me tell you this. The only country, that is so dependent on Treasury bills, on bills to finance the deficit, is Turkey. Okay. The only country in the world. Okay. It's Turkey and now the U.S. So by issuing so few bonds and notes, they've been able to cap long-term interest rates, right? Because imagine the more longer-term bonds and notes that you're issuing, it will drive up long-term interest rates. And long-term interest rates is what really drive the stock market, drive the housing market. They want to keep the stock market booming. They want to basically keep the housing market healthy. So they needed to basically cap long-term interest rates. And guess what? That's what they did by doing what Turkey does. Now, what's even more extraordinary is in the last 12 months, foreign investors bought about $500 billion of bonds and notes. In other words, what the U.S. government sold to Americans were only bills. It's unprecedented. It's unprecedented. You can look it up. It happened, it very, very rarely this happens, and usually it's in a total emergency. The fact it's happening this year, it's just absolutely shocking. I'm just shocked nobody else is talking about this. Nobody JP Morgan is not talking about the Goldman Sachs. I guarantee you, if they did, Jamie Dimon would be calling to the U.S. Treasury's office like Jenny Yang and say, what are you trying to do? Okay? What I'm trying to tell you is this. Now, forget about this. This is about, the Democrats are determined to win this election at all costs, even if it means, engaging in financial engineering. But let's just say, forget it. I can live with that. Okay? That's human instinct. When people are in a position of power, they're going to do whatever in their power to basically stay in power. Now, however, you ask me, what happens if Trump were to get elected next year? Well, even for that matter, Biden. When, as I told you before, if you're issuing $1.5 trillion of bills this year, short-dated, basically bonds, that means that they're all going to mature next year because they have a maturity less than 1 year. So next year, you're going to have to roll over $1.5 trillion of bills. on top of the $2 trillion of budget deficit you still have to basically finance. So next year, you're talking about a gross financing requirement of maybe close to $4 trillion. Who the hell is going to basically buy $4 trillion of Treasury securities next year? You see what I'm saying?
Yeah.
And this is something, I mean, if you're basically Trump, you're going to be very sorry. Basically because Biden is going to be leaving a huge mess behind in this way. I mean, in fact, Trump talked about Jamie Dimon as Treasury Secretary. I don't even know if Jamie Dimon wants the job if this is the situation, because there is no doubt that this is a very slippery path. Okay, so $4 trillion, where are you going to find that kind of money? Now, on top of that, especially given we know the Chinese not going to be buying, we know that basically most likely the Japanese not going to be buying anymore, because just this 2 weeks ago, the biggest Japanese, basically buyer of U.S. Treasuries, Japan Postal Bank, just said that they're sitting on such losses. They want to actually be selling. The Russians not going to be buying. I can tell you some of my biggest, I count as among my clients some of the biggest sovereign wealth funds in the world. They're not going to be buying. They understand what's going on. So who's going to be buying all these $4 trillion of U.S. Treasuries next year? Okay. So this is going to be issue number one. A mess that Biden will be leading, for either for himself or for Trump next year. What about something else? If you look at Trump's campaign promise, the number one item is, of course, to secure the border. The number two item is to carry out the biggest deportation of illegals in America's history. Think for a second what that actually means. Because I don't think the stock market is thinking through what this actually means. Okay. Because we all know that Trump means what he says. I mean, that's one thing. That's why analyzing Trump is so easy, because you just, you just look at what comes out of his mouth and say, okay, fine, this is what he's going to do. Now, since Biden became president, there have been 8 million encounters at the U.S.-Mexico border between the U.S. immigration agents and basically illegals. So that's 8 million people right there. Now, if we were to include people who were able to get into the country without even encountering immigration, basically agent, we're talking about maybe 10, 12 million people. Who knows? It's a very large number. Okay. Now imagine trying to deport 10 million people. I mean, has anybody in the stock market basically thought about, so how is Trump going to deport 10 million people? In fact, one of Trump's top advisor, who's probably very likely to become his next Homeland Security, basically a guy, just said last week that they're going to send in the military, round up basically the illegals, put them in camps, and then deport them. Now, listen. And by the way, it's very important to understand that the vast majority of Americans are in favor of this, right? I mean, in fact, I just looked at a poll that came out, not so long ago, that 55% of Americans are in favor of mass deportation of illegals, including 45% of Democrats. So this is something, the reason why this is the top of Trump's promise is because it's a very popular thing. And that's another reason why he'll do it. Now, forget about deporting 10 million people. Imagine they even just basically deport 1 million people and having to send the military in to hunt them down, to fucking chase them around. Imagine the military, it gets sent into the sanctuary cities to round up basically illegals and have to face off with Antifa, for example, or violent protesters, or whatever have you. I don't know. All I know is that it's going to be a very, very messy business. Okay. So from that point of view, I think Biden is leaving Trump with a very tough situation. Leaving a very tough situation from the point of view fiscally is he's leaving nothing at the bank. Okay. Immigration, he's allowed all these people in, and now Trump will have to devote probably most of his administration trying to solve this problem. Biden started the war in Ukraine, which Trump is going to try to basically end, because America has no business being involved there. Okay. But that won't be easy, because for one thing, the defense establishment in the U.S., which is right now swimming in money, have every incentive to stop Trump. Okay. So you tell me, Do you think that the second Trump term is going to be a honeymoon, or that is going to be like climbing the Everest?
Yeah, I mean that the way you outline it there, it's not the environment you want to inherit. Let me ask you this then. Okay, so a lot of folks have the Trump trade wrong. They're piling into the stock market. They're excited. They think, okay, this is just like what we saw 2017 all over again. So from your vantage point, how are you thinking about playing this? How do you position? Or maybe is it too early to even start to think about that? But I am curious, like, how would you want to play this scenario?
Right. So for me, the ultimate Trump trades, by the way, are basically defensive trades. I know it seems so strange, okay, because we don't know, like, because everybody say, oh, Trump is bullish, and this and that. I would say I would do the opposite, because first, there are so many open questions. Just we just said, like, was the assassin a lone wolf? If he's not, will they try again? You know, the Democratic Senate candidates are currently leading in practically all races. So, you know, is it possible that the Republicans are actually going to capture the Senate, which is very crucial for the Trump trades to have a clean sweep? Does Trump actually mean it when he said he's going to basically impose this massive tariff on the rest of the world? Was that just campaign speech? So there are so many questions out there, right? So against that when you have a lot of questions, uncertainty like that, okay, I think there's no doubt that market's too complacent, risk premium's too low, and volatility is too low. So the trades that I have on, and then again, I'm happy to tell you, I've already have these trades on. I'm long gold. Okay. Mm-hmm. I think this entire, basically situation is pretty bullish gold. I mean, trade war is bullish gold. But more importantly is the fact that, you know what? I think if the Chinese, were reading about JD Vance over the weekend, they're thinking like, we better start buying even more gold, because like JD Vance hates China even more than Trump. I mean, Trump doesn't hate China, but like JD Vance really has got this thing for China. So from that point of view, I would say the Chinese will probably even accelerate their basic diversification out of dollar into gold. So I think gold, there's a lot to be said about gold. There are many reasons why gold could do well in this environment. The second trade I like is I happen to be long the September VIX contract, right? I mean, as you know, people know about VIX, right? But VIX is basically just a 1 month. It's the 1 month contract, basically of VIX. But VIX as a whole, basically futures basically curve. I'm long the September VIX contract, which basically expires just before the November election. So from that point of view, what I'm playing for is, increase in uncertainty and political risk ahead of the US election. I think there's still a lot of uncertainty that remain between now and November 5th. I'd rather play that uncertainty as opposed to playing what happens after the election. Okay? So I'm long the September VIX contract. And then the third thing is I'm long the Japanese yen. I'm short the euro and I'm long the Japanese yen. You might say, well, why the Japanese yen? There's been a weak currency, which is also the beauty of this, which is that because, the yen is right now very undervalued. But the beauty of the yen is this. Think about this. Political risk in the US is going up. Political risk in Europe, and we haven't even talked about Europe yet. Political risk in Europe is going through the roof. Okay? Whether it's in France, in Germany, even in the UK. Okay. Ironically, of all the major countries in the world, the only country that enjoys relative political stability is Japan. The Japanese are not ideological people. And then the LDP, the Liberal Democratic Party, remains the dominant party in Japan. I mean, they've been in power for 50 years, whatever, maybe even longer. So from that point of view, I think Japan could actually turn out to be a safe haven in a world of rising political risk. I also think that the Bank of Japan later this month is going to embark on a major quantitative tightening exercise. But that's a different story altogether. And I think the yen, it's a crowded trade, would do well. I also like, there's something else I like, which is, betting on a recession in the US. Because right now, nobody thinks there's going to be a recession. But yet, if you look at I like basically betting on things that are cheap, actually, right? Right now, when I say that nobody believes in a US recession, is because if you look at credit spreads, right? Especially credit spreads on what we call high yield debt, right? These are like companies that are not investment grade companies. They're sort of below investment grade. They're otherwise known as junk bonds, right? So junk bonds, high yield bonds, they're the same, right? They're below investment grade, meaning that, companies have issues, okay? And that companies, when times are bad, they're likely to default. If you look at the spreads of these bonds, okay, to US Treasuries, they're currently near the lowest level in 5 years. That makes no sense to me. I mean, to me, like if there's going to be any hiccup, the economy basically goes into recession, you're going to see probably a big increase in default rate. So I happen to be short. So I'm basically out long 2-year notes and I'm short basically high yield debts, via an ETF called HYG as a way to do this. Listen, I always say this. If you're a retail investor, don't try this at home because I don't know, like you could if you're more experienced, but this is not like buying Nvidia or selling Nvidia or whatever. These are what I would call, these are macro trades, okay? And these are trades that, not everybody can access your Fidelity account, that sort of thing. So you have to, a lot of this is through futures and so on and so forth. But the idea here is like, this is my background. As you know, I'm a macro strategist. Most of my clients are macro. These are people who trade currencies, they trade bonds, they trade the fortunes of countries, right? I mean, this is different than trading fortunes of companies. I don't care as much as about what individual companies do than I do about countries' future. And that's what these trades are about.
Mm-hmm. I was listening to you in that answer, betting on a recession. Not a lot of folks are expecting it. I've had some folks on this channel who are expecting it. Actually, I had Professor Steve Hanke on this week, looking at the quantity theory of money and why he thinks we will see inflation fall, but we'll probably enter a recession either late this year, early next year. So there are some folks who have been on this channel who feel that way. Can I just hear more on the recession thought process? And we haven't really talked about the Federal Reserve either, but maybe we should also bring up the Fed and their interest rate policy. Some are expecting a cut maybe in September as well, but can I just get more of like the US outlook, the recession, Fed policy, that sort of thing?
Sure. So let me just tell you this, okay? I mean, for me, like recession is not like it's not 100% chance. Nothing is 100%, And the reason why I'm not banging the table saying a recession is coming, okay, is because for me, there is one leading indicator, okay, of US recession that has to basically like get triggered for me to be absolutely 100% certain that we're going into a recession. Okay. By the way, some of these things are getting triggered. Like, for example, you might have heard of this thing called the SAM rule.
Yes. Claudia Sam's been on this program.
Exactly, right? So the SAM rule has been triggered, but that's a good leading indicator. But without this other shoe to drop, you're not going to get a recession. And what's the other shoe to drop? That has to drop. U.S. corporate profit margin. Right? If you actually look at U.S. corporate profit margin, it's been one of the best leading indicators of recession over the last 50 years, 70 years, how long you want to look at this, right? And what you normally find is that corporate profit margin starts to go down, okay? And once they go down far enough, whammo, you get a recession, right? And the reason is pretty obvious, right? We all know recessions are accompanied by high unemployment, right? So when companies' profit margin starts to go down, eventually when companies not making any money, they're going to be laying off workers, okay? So therefore, the SAM rule is nice, but the SAM rule in itself has to be the result of corporate profit margin. And right now, corporate profit margin in the US is near all-time high. Okay, all-time high. So the question is, like, why? Like, you might say, well, that seems very strange because, over the last 2 years, like companies having to pay more for their workers, they're having to pay more for their raw material, they're having to pay higher interest on their debt. So why is it they're making so much money? Well, it's actually, if you look at the numbers actually tell the full story. If you just look at S&P 500 companies, right? In the first quarter of this year, which is the last quarter we have full data for, the so-called Magnificent Seven, their earnings went up by 50%. Yes, you heard me right. the Magnificent Seven, their combined earnings, okay, before tax and interest, increased by 50% compared to a year previously. Massive. And just think about it. These are already the biggest company in the world, and their earnings went up by 50%. You might say, well, what happened to the other 493 companies? Guess what? Their earnings went down by 6% during the same period. So you're talking about just the Magnificent Seven that's holding up U.S. profit margin, that is preventing the U.S. from going into a recession. Now, why is that? Why are these companies doing so well? In my view, it's called paper profit. And let me explain to you what I mean by that. If you have any questions, you can ask me. We all know that the explosion of earnings of these companies are the result of course, generative AI, right? What is really going on with generative AI? You say, okay, in terms of creating all this profit, right? So NVIDIA, as we all know, okay, is selling chips to the other companies, the other Magnificent Seven, right? In fact, actually, most of NVIDIA's chips are sold to the other Magnificent Seven. That's the irony of this, okay? NVIDIA is obviously making money, right? Why are the other companies buying NVIDIA chips? If you look at the biggest, cloud operators, okay, meaning that companies that offer cloud services, meaning that they, whatever, I hope everybody knows what that means. If you don't, you can Google it, okay? Look up Wikipedia.
Yeah.
So which are the biggest cloud service providers in the world? Number one is Amazon, Magnificent Seven. Number two is basically Microsoft, Magnificent Seven. Number three is Google, Magnificent Seven. And number five is Meta, in other words, Facebook. So what's happening is that basically, so NVIDIA is selling billions of dollars of chips, very expensive chips. Each chip is like $50,000. They're selling these chips to the other Magnificent Seven so that they can actually go out and market their now newly AI-enabled, cloud services to their clients. Now, no doubt that these companies have seen an increase in revenue from their cloud, basically services, right? Because companies that want to access AI and that kind of thing, they decide, okay, fine, I'm going to do it by basically accessing AI through the Microsoft Cloud, whatever it is. But remember one thing, okay? Microsoft, Amazon, Google, they're buying these chips in order to basically offer AI-enabled cloud services to their clients. And then there's take up, and then their cloud services revenue has definitely gone up. However, it hasn't gone up basically as much as the money that they're pouring into these chips, except because of accounting law, they don't have to expense these expenses, these chips spending in today's income, to the extent that actually the money they're spending on these chips hit their income statement only gradually through depreciation. So as a result, they're basically, essentially, reporting record profits. But the cost, okay, is going to be assumed to be borne out over time. That's the greatest irony of this, which is that so far, nobody's making money from AI once you take into account of the money that you have to spend to buy these chips. But right now, as far as most of these Magnificent Sevens are concerned, they are not basically taking the hit on their chip purchases today in their income statement. They're delaying it for many, many, many quarters down the road. And as a result, they can report record profit. But let's just say you can even live with that. But now the question is, what happens to the other 493 companies? Because right now, everybody on Wall Street, by the way, if you look at Wall Street consensus forecast, market is looking for 10%, EPS growth in 2020, basically and then to be followed by 2025, 13% EPS growth. In other words, market is expecting profit growth in the US to accelerate next year on the assumption that this productivity gains as a result of generative AI is going to spill over to all the other companies. But now think about all the other companies. When they are paying Microsoft today more for cloud services to do AI. They have to expense that against today's basically revenue. Okay. As a result, in my view, unless they can show immediate results, in fact, spending on AI could actually be not only neutral, but in fact, negative for profit margin. In my view is this. This is why, looking at PE is not the way to see whether these companies overvalue or not. In my view, you got to understand how this actually process works. And what I'm trying to tell you right now is, okay, basically, the reported profits have gone through the roof as a result of generative AI, but actual, basically, results, you know what? It's very, very small right now. And that's why I think to a great extent, generative AI, as much as I think long-term it's an interesting thing, it could potentially be transformative, but I think this thing is a bubble right now. And then even when this bubble bursts, whatever it is going to be, let's just say, I don't know, this quarter, like Google or Microsoft or Facebook says, well, listen, I don't know, we overspent it and we overdid it and that kind of thing. The stock market has a correction, then we're going into recession. Because this is about profit margin. So what I'm telling you, the profit margin has remained high for the reason I just explained to you is not sustainable. And then when that cracks, that's when basically shit hit the fan and then we get a recession. But that has to happen. This is why I am not predicting a recession until, again, you might say, well, this is bullshit. But I'm just telling you, to get a recession, you need to see a decline in corporate profit margin in the US. To see that, we need to see the AI bubble bursting.
This is why I love hosting this podcast, because I'm learning, our audience is learning. We have such a diversity of viewpoints. And I have to say, David, I love having you on. It is such a treat just to get to just having the time just to listen to you and learn from you over the course of an hour. You've been so generous, and I would love to get you on more often. I don't know if you're open to it, but if you'd come on more often, we would absolutely love it. I want to give you the final few moments here to share more about your work. You have a wonderful YouTube channel for folks to subscribe to as well. But I just want to leave, I want to give you the last few minutes here. Let folks know where they can find you, support your work, find your work, and any parting thoughts, anything that you would like to leave the audience with today. The floor is yours.
Sure. Thank you. So as you said, I launched my YouTube channel, as a way to promote, fact-based debates, in the world of policies, economics, geopolitics, so on and so forth. I realize a lot of people, my experience so far is that people, they gravitate to channels that agrees with them, right? I guess it's kind of natural, right? You like listen, to other people who agree with you. Okay. What I try to do is, it's not about agreeing. It's not about agreeing with me. It's not about me even. It's about the facts. What do the facts and the numbers say? I come up with a thesis and hypothesis. I try to defend it using facts. And you are more than welcome to come and disagree with me. I try to basically, respond to comments as much as I can. But I think what I'm just asking people, again, it's not just about my channel. YouTube is a great place. You find a lot of different things, which is amazing. Okay. But the important thing, bear in mind, is don't only go to listen to people who you agree with. And that's actually very dangerous. I think we want to we all, especially politically, we all have our biases, of course, but try to basically see, you could tell the difference between facts versus opinions. And I think the biggest problem in the world today is that there are more opinions than there are facts. And that's what my channel is trying to correct. Thank you.
I love that. David Woo, CEO of David Woo Unbound. Thank you so much for being so generous with your time, all of your knowledge, your ideas, getting us to think more, to have these conversations, to have these debates. I feel like it's more important than ever. So I just really appreciate you, David. I hope you have a wonderful weekend, and I look forward to having you on again. Thank you so much.
Thank you, Julia.